Hi, everyone. This is Will, aka Dr. Financial Literacy. First of all, hope you had a wonderful Memorial Day, and thank you for all those who serve and try to protect our community. All right, so this is part 4 in the last in aspects of part 5 is coming up next, but this is just an update. Now, to update you to this point, my income. Sorry about the marker is about 33.90 per month. My expenses are about $3,000 per month. So that leaves me with a cash flow of about $390 per month. So one of my clients down in Georgia really wanted to know how the system worked without me implementing some of the strategies that I implemented in general. So now I selected Navy Federal as the clean card to try to show you and my client in general how it operates. So the balance on this credit card that was due for 6/1/2024 was $5,212.45. Okay, so this isn't a card that has cash advance and it has convenience checks that I've used the convenience checks to get 100% of my bills onto the credit card to bring down the principal to see how it operates without any additional strategies, without bringing in any additional money, but just making sure that my entire salary goes on the card. So I'm gonna swing back to my Navy Federal account and see when I put in my paychecks, my biweekly paychecks. Okay, starting in May. So the first biweekly paycheck went in on May the 15th, 2024, and that was 1694.93. So I put in a 1694.93 on the 15th, 5/15. Okay, let's see what that brought that down to. All right, 5212.45 minus my first biweekly paycheck of 1694.93. That brought it down to 3517.52. 3517.52. My second biweekly paycheck, because I think we got paid because of the holidays early, went in May the 26th. That was 1694.93 again. 1694.93. I'm gonna subtract that from the 3517. So that brought the balance down at some point to 1822.59. Now, in between the 15th and the 26th, I had some expenses. So they amounted to about 200, 300, little things like McDonald's, Speedway, gas, Panda Express, Wendy's, grocery store, Walmart. So there was some of the spending in between, but I'm not subtracting that yet. So the main thing I wanted to start off and to show the client, I placed my entire 2 weeks check from 2 weeks period inside of the credit card of 5/12/45. That was the last balance, and it had a due date. Now, my payment for this credit card, $141.85. So according to the statement, they wanted me to pay 141.85 by 6/1/24. Okay, so of this 141.85, 89, how much would be in interest? I did the interest breakdown on another episode earlier, but the number is going to be off just a little bit. So 141.85, I remember about $51 was going toward the principal. So I'm gonna just say $51 toward the principal. So of this 141.85, $51 was going toward the principal, and 90.85 was going toward the interest. So if I just made this regular payment that they were asking me for, that would be the interest, and this would be the additional one from the principal. So as of now, in looking at my Navy Federal account, I got I have two transactions pending, but the balance on the card is $2,077.15. Now, two of the major outstanding debts that to come in for the card, one is my student loan payment that hadn't been posted yet, but I use convenience checks to get everything on the card. So 374 needs to post, and also my rent and utilities need to post also, and that's 1,400 and I think $36. Can't remember the cents. So at a minimum, 10, 11, 8, 1. Okay. So right now, the balance is 20.77 on the card. I have about $70 in pending transactions, and I have an additional 18.10 that is going under the convenience check. So at least what I can say about velocity banking. So the least that I can say about velocity banking is that as a result of putting my entire checks into the credit card and then taking them out, eventually I reduced the average daily balance throughout the month. So some advocates indicate it really doesn't matter if you put in the first of the month, the middle of the month, or the third of the month. The idea is to try to get money onto the card that you're already going to spend to bring it down. So the two checks are in there. I've been making some deductions, like I said, Walmart, grocery stores, gas, and things of that nature. To now, as of today, the balance is 20.77. Now that's going to go up because, as we can see here, at least $1,810 will be added back to it, and these two are the convenience checks. And also, I made two purchases today, about 70 in general. So I'm just going to ballpark it just in general to see what it can go up to. So I'm gonna add the two convenience checks that I have out. Okay. $374, the student loan, plus 1436, which is the rent, utilities, and everything. 1436, 1810, plus the about $70 in charges that I did today. That's 1880. So about 70 in charges today. That comes up to 1880. So I'm gonna add 1880 to the balance right now. Okay, so that's 15, 7, 15, 9, 3. That's $3,957.15. Now that's the balance as a result of putting the checks in, running my expenses, which is typically, now this is the average, it may be higher or maybe lower, and it's giving me a cash flow of 390. Now, if I just made the 141.85 payment, let's see, 52, 12, 45. Now, of this 141.85, only 51 would have actually went toward the principal. So I'm gonna go ahead and subtract that from the principal because the interest is gone. They just calculated the interest on here, which is about 90 some dollars. So that's not even a part of the balance. So let's take 50 to 1245 minus 51. That would have given me $5,161.45 instead of 39.57 the velocity banking way. So by doing it this way, it's really going to help me to kind of look at the math. And this is again just part 4. Part 5 will be the last analysis when the statement closes. I think maybe the second or the third, but at least for the month, I just wanted to make sure that I got all my expenses in for the month of May. So I paid my rent earlier rather than the next month. So I kind of lost some interest on that. Student loan was due next month, but I wanted it to all happen in this month. So I really probably lost some interest savings, but I wanted to actually run this to make sure that you see everything that's going on in a full-fledged account. So again, just to sum part 4 up, the balance on the Navy Federal card starting in May was $5,212.45. I placed 2 of my biweekly checks into the account during different periods. That was on the 15th and the 26th. So at some point, it reduced the average daily balance by just having those 2 checks in there. As of today, before some transactions I made today, the balance was $2,077.15. Those pending transactions that still had to occur, $70 I just did today. $374 is a convenience check that I wrote to the Department of Education, and 1,436 I wrote to the rent office, the apartment complex that included my rent, my water, electricity. No, I'm sorry, the rent, water. What else was on there? Rent, water, trash, a $5 convenience fee. I need to really talk to them about that. But in general, this covered all the utilities except for the electric bill. The electric bill has already came out earlier also. That was about $200. So the main point that I wanted to do for my client and for you all was to really see me start from scratch without putting any extra money in and some of the other strategies that I use outside of convenience checks. I still used it here because I wanted to pay everything through the card. I wanted to put every penny that I made from 2 weeks of work inside of this card. Um, a cash flow of about $390. That regular payment for Navy Federal, if I just would have did it the regular way, would have been $141, and only $51 went to the principal, and that would have only given me a balance of about 5160.45, whereas the velocity banking, if I'm doing the numbers right and correct, would give me a balance of $3,957 with the rest of my bills going into the account. All right, so this was part 4 of the experiment that my client really wanted to see without anything extra. Just look at how the numbers worked out or could work out. And the end will be June the 1st, which would have been the due date for this card. So I'm gonna come back June the 2nd to see how everything kind of worked its way out. All right. Again, thank you very much. This has been Will, aka Dr. Financial Literacy, where I am a political economist. I'm not an attorney. I'm not a CPA. I'm not a financial advisor. Just going through my real world experiences that I have with my clients and also with my own resources and bringing down my debt. Thank you very much again for joining me, stopping in, and seeing how velocity banking, accelerated banking, could help you to reduce your debt as it has helped me to reduce my debt for the last 5 to 6 months, and it helped me to secure my first home equity line of credit. And I'm working with Navy Federal to get a second home equity line of credit in general. All right, well, thank you very much for stopping by. You have a great day.